Hello. What does your mindset has to do with investing and making money on the stock market? Today I will be answering that question and also talk about how important it is to have the right mindset when you invest on the stock market. Rule number 1 is do not never ever believe unrealistic promises. Because if you have a mindset believing in quick riches, quick returns, and if you believe any promise of someone who has a slippery tongue, and of someone who comes and deliver a message of urgency, create an impression of a one-time opportunity that will never come again, and you are still interested in investing in someone like that, then definitely you do not have the mindset of an investor. So what is the mindset of a true investor? A true investor understands that money, like everything else, takes time to grow. A true investor understands that the market requires patience, research, and timing. Because timing requires that you know when to buy and when to sell. There are many people who would come and promise unrealistic returns, and you would believe them because you think that getting rich is easy. You think getting rich happens automatically. You think that getting rich is quick. And getting rich, it's none of those things. But the stock markets, if you approach it right, is the ideal place to get filthy, stinking rich. So when I talk about the mindset, is to believe you must have an inquiring mind. You must have a mind that's hungry for knowledge. You must have a mind that is able to tell the difference between the nonsense of empty, unrealistic promises and the reality of the stock market. Here's an example. I come to you and I smile so beautifully and I am so nice and I say all the right things, and I convince you that if you invest 2 million US dollars or 2 million rands with me as a South African, within 2 months, that 2 million, it will be 4 million US dollars. That is absolutely impossible. First of all, when you invest on the stock market, there is absolutely no guarantee on how much money you will get. There is absolutely no guarantee that your money will double. There is absolutely no guarantee that I can commit a specific amount that you will get out when you invest on the stock market. Because the performance of companies the companies who are listed on the stock market, it is linked to the performance of the share price. It is linked to how much people value and believe in that specific stocks. It is linked to the credibility, to the established, how long this company has been in business. So your chances of getting returns of investment from an established, well-managed, well-known business, it's so much bigger when it's listed on the stock market, of course, because for you to invest in any business, it needs to be listed on the stock market. You require patience. When you invest on the stock market, and there's a difference between trading and investment, but that's a story for another video. With investing, you don't monitor the stock price. Today it's up, tomorrow it's down. You don't monitor the stock price sitting there staring at the screen like a trader. No, you invest your money into the stock market and you leave the money there, because the reality is when you invest, it's only after 5 years or more that you will see a return on your investment, provided that you invested in the right company. Also bear in mind that there are different options to invest on in the stock markets. So you need to find out what is the one that works for you. And you need to understand it's money that you are willing to lose, because every investment on the stock market comes with risk. The tendency of the markets is to go up. But you have to bear in mind, in that up movement, there are many up and downs, up and down movements. It's not a constant straight line that you see afterwards. You would have to do research into the companies. You would have to know who is managing this business. Who is the CEO? Who is the team they have around them? What is their culture? When you look on where to invest and how to invest, think of the products that you use, the places where you shop, where you bank, your insurance. Those are where you invest. But most people choose to invest. If I'm an individual and I come to you and I promise you unrealistic returns, you choose to invest in someone like that because you believe in a quick fix. Because when you invest in the stock markets, the first thing that you will hear is that it's going to require time, patience, discipline, a plan. Why do you need a plan when you invest on the stock market? Why? Because your plan, and of course this plan, it changes from year to year. So you have to reevaluate your plan. Your plan will determine when you want to take out your money. Ideally, they say buy low, sell high. But how do you know what is the highest high? How do you know when is the right time to buy the stocks? That's where the mindset comes in. A mindset that is based on research, that is based on knowing what the current developments are around the company whose shares you want to buy. It is knowing where in the industry they stand. What is their culture? So if you have a mindset of I want to invest 500 Rand now and a month later it will be 5,000, don't put your money on the stock market. It's never going to happen. But if you want to believe the promises of someone like, give me your 500 Rand, then I will turn it into 50,000. That's unrealistic. The realistic expectation of the market in South Africa specifically, obviously, when you look at your S&P and your other international markets, it will be slightly higher, but realistically in South Africa, it's between 6 and 8% per year. So to come back to the mindset, you need to be disciplined. You need to understand how the stock market works. You need to be realistic. You need patience. You need a goal. With money, if you don't have a goal, but you invest the money, if you don't have a goal, anytime that the market shakes a little bit, you will be afraid and take your money out. But if you have a goal and you said, I want to keep this money for 5 to 10 years, it's a long time, right? But that is what is required when you put your money on the stock market. And if you have a goal, even if the market gets shaken, then you know my goal has not been achieved yet. I'm going to keep my money there. Also bear in mind, the trend of the market is upwards, which means share prices increase, values of companies increase over time. Unless you have some person, in the case of Steinhoff, who were quietly destroying the business on his own, then you are in trouble. So that's why it's important. Look for a business where there's no personality attached to the company. The company is being run by a team of people. There's no rock star. There's no star personality. There's no superstar investor. It is a solid, boring, traditional, established business who, when you go and look at your financials, because you have to look at the financials of a business for you to invest. You have to look at the financials. You have to look at the trends. You have to look at the company culture. You have to look at what puts them on the news. And it will give you a picture of what this business is all about. So I hope I didn't burst your bubble when I now gave you the lowdown on what it means to invest on the stock market. That it's a long, slow, patient game. But if you think I'm talking nonsense and you have found someone who promised you like this beautiful returns, you can obviously go and invest with that person. And then maybe you will become one of the statistics of people who have been scammed out of their money. The key message I want to leave you with is that to get rich is possible for everyone. There's not a single person on this earth, regardless of what people want to convince you of. There's not a single person on this earth who does not have the ability to become rich. But to become wealthy, you need to know how to play the game of money. And the first thing that is required to play the game of money, it's patience, it's timing, it's knowledge. It's to be able to see ahead. It's to be able to follow trends, to do your own research, to speak to the right people, and to bear in mind that this is your money. And you must be sure that when you put that money there, that it will be managed well, it will be taken care of, and that your money is safe. And of course, with the stock market, even though the trend of the stock market is up, the possibility that your investment will lose value is also there. So that is why you also need to stay informed about the company whose shares you have bought. But it's possible to be rich. It's possible to be wealthy. But it requires research, timing, and patience. And that, in a nutshell, is one of the key elements if you want to invest on the stock market or if you want to buy shares. And the key thing is, don't go and invest because I told you it's such an amazing share. I made millions with that share and you have to invest in that company. Don't do it. Do your own research. Make up your own mind. And before you part with that money, know for a fact that it's going to a good place. Trust your gut. If your gut say it's a no-go, listen to your gut. But if your gut feels calm, confident, and sure that this is the right thing to do, then invest. The safest one is to invest in places that are reputable, in places where there's no overwhelming personality, but in places that are established, well-known, and safe. But that's it. It's a wrap. Let me know what you think about investing. Let me know if you want to know more information about it. And most of all, Keep on doing research until you find that company that resonates enough with you to put your money with them. And then, thank you for watching. Like, share, and subscribe.